Alright guys, so welcome to my YouTube channel. Welcome to Amber Trades YouTube channel. So for those of you that are seeing me for the very first time, my name is Amber Trades. I'm a crypto trader. I trade stocks and I trade Forex. So in this YouTube channel, we are teaching everything you need to know about Forex trading, right? So if you're a beginner, make sure you subscribe to this YouTube channel because it's going to help you a lot. Alright, so today we are talking about order blocks. As you can see, what is an order block? If you are a newbie, if you are coming into forex trading, one of the important things you need to understand as a trader is what is an order block. Because order block is just like a foundation of everything. If you don't understand what is order block, it's going to be very hard for you as a trader. So the number one thing you need to understand is what is an order block. All right? What is an order block? So if you are listening to me right now, make sure you grab a pen and grab your notebook, all right? Because you are going into class. This is a large areas where banks and institutions place a large order before the market moves, all right? That's basically what an order block is. This you are seeing here, this is an order block where institutional traders place a large order before the market moves. Now, where to spot an order blocks? Where to spot order blocks? You can't just go into the forex market and begin looking for order blocks because there are so many order blocks. This is one of the mistakes that beginners traders does. They go to the 5-minute time frame, they look for another block. They go to 1-minute time frame, they look for another block. Order blocks are everywhere in the market, but you need to identify where to find the very particular one to enter your trade from. Okay, so where to find an order block? Number one, you can find your order block at a supply level or at a demand level. This is where to find your order blocks. You can find them at a supply, you can find them at a demand, you can find them at support, you can find them also at a resistance levels. These are where to find your order blocks. So if you are going to the forex market, what do? You look for order blocks at these places. Remember, I said that order blocks are more in the market. That means there are a lot of order blocks. But you need to understand where did the institutional traders or the banks enter their trade from. And also, spotting another block is not enough. You need to know how to identify a good order block. So number one place to spot a good order block is price must leave the zone aggressively. Price must leave that zone aggressively. What do I mean by aggressively? There must be a large momentum. There must be a large order at that particular zone where price reacted from. That makes it a very good order block. Number two is the move should break previous high or lows. The move should break previous highs and it should also break previous lows. If the order block occurred in a bullish trend, that move should break previous highs. Do you understand? It should break previous highs. Now, if it is on a bearish trend, that move, that fall off, that sell off should break previous lows. All right. And also, the order block must come with a fair value gap. All right. Make sure you are documenting, make sure you are writing everything I'm saying. An order block must come with what? A fair value gap. It must come with a fair value gap. Now, this is what I'm talking about. This place right here, this is the order block. This particular red candle, the last red candle before a bullish momentum, that is your what? That is your order block. You saw that I was waiting patiently for the market to come down there before I can enter for my buy. So whatever I'm showing you, whatever I'm teaching on this channel is what I am practicing, is what I've been doing. So it has been for tested, it has been back tested, and that is what is making me consistent profit in the market. All right. So now this particular zone, this particular red candle that you are seeing, this bearish candle is where is your order block. All right. So that is your order block. That particular red candle right there is your order block. Now, I also said the order block must break previous highs. What did I mean? This high that was here has been broken. You can see this was a high and the high has been broken. Why? Because that order block is a very strong order block. All right, it is an institutional or banks that entered the market at this particular zone. That's why it caused this market to break those highs. And also, don't forget, there was also a resistance level, like a supply level, a 4-hour supply level at this particular point. You can see I sold the market from this point on Thursday. Yeah, this is where I sold and I make some couple of dollars. So now, if the market comes up here and breaks this high, this particular high, what does that signal to as a trader? It is signaling to you that this market has turned bullish. All right, the market has turned bullish. The market is no longer on a bearish trend. Why? Because the institutional traders or the banks has entered for a large volume. All right, they just bought the market at that particular zone. That's why you saw it also broke above here, broke above here, broke above this other high. You see, previous highs, this one, this is two, and this is three. Remember, I said it must break above highs. That is it. One high has been broken, two and three highs. Then number two, it must have a fair value gap. Now, the fair value gap in most cases are optional because not every order block comes with a fair value gap. Yes, it does not mean that an order block with a fair value gap is not a good order block. But in case you spot another block with a fair value gap, what you need to understand is that that order block is an A plus order block. Now, where is the fair value gap? If you check at this other candle, you will see that there was a gap just right here. All right, you see that there was a gap just right there, making this a fair value gap. This gap that you are seeing right here is a fair value gap and it has an order block under it. So that is exactly how to spot a very good order block. Remember, it must break highs. If it is on a bearish candle, if it is on a bearish trend, it must break lows. Now, the next thing is types of order blocks. There are so many types of order block. All right, there is a bullish order block and there is a bearish order blocks. Example, I said a bullish order block right here. What I just showed you here is a bullish order block. You can see the last candle before the bullish momentum took over. All right, that is the last candle. It's very clear. The last candle is the red candle right here before the bullish momentum. You can see this was a very large momentum this morning. A bearish order block. Let's look for a bearish order block. Now, this is a bearish order block. Bearish order block. Remember, I said the last candle before the market moves aggressively. Now, what was the last candle? This green candle was the last candle, and the market moves aggressively. This you can see that this market was very aggressive going down. All right. Now, that last candle, which is the last opposite candle, is the green candle right here, making that green candle automatically an order block. So that is a bearish order block. This is a bearish order block, and this right here is a what? A bullish order block. All right. This is also an order block. As you can see, the market came down, tap on it, and moves. The opposite candle before the aggressive move. Where is the opposite candle before this aggressive move? Is the red candle, right? Now, come back here. The opposite candle before the aggressive move. Where is the opposite candle? The green candle before the bearish aggressive move. So the last thing is best time frame for order blocks. There are so many time frames. People look for order block in a 5 minutes, they look for order block in a 15 minutes, they look for it at a 1 hour. But you need to understand this thing. If forex trading is a probability industry, because everything is on probability, you always need to look for the best of it all. That is because it's going to increase your chance of winning. Number one, higher time frame order blocks. I'm talking about a daily order block. I'm talking about 4 hours order block. All right, these are your higher time frames. Now, we also have lower time frame order blocks, which is the number two. Now, lower time frame order blocks are the 15 minutes or the 5 minutes order block. So remember, there is a high chance of the higher time frame order block, which is the daily 4 hour, 1 hour, and 2 hours working than the lower time frame order block. All right, it has the high chance of pushing the market back to where it is coming from. All right, so you need to always look for your order blocks at a higher time frame. If you have been watching this video for the very first and down to this last minute, that means you understand everything you need to know about order block. And also, don't forget, if you have any question, make sure you drop your questions on the comment section. I'm always there to reply to your questions, and tell me which other problem you are having so that I can make a video explaining it as easy and as simple as it is. These are everything you need to know about order blocks in forex trading. Subscribe to this YouTube channel and follow me on all social media handles for more educational content like this. All right, see you guys on the next one. Drop your comments.